Hi traders, and welcome to my video on the demand index indicator, where I'm going to show you how you can capture moves such as this one for almost 400 pips. Stay tuned and watch the whole video to find out exactly how to do this. So the demand index indicator works like most oscillators. It's a momentum-based indicator, best used in trending markets. It doesn't have specific levels such as the stochastic, CCI, RSI, etc. Instead, you just have to visually look for when the demand index is increasing in value. This means that the market is potentially gaining momentum to the upside. And on the contrary, when it is decreasing in value and falling to the downside, it means that we are perhaps in a bullish or selling market. Okay, I've added the zero line here. This is the demand index indicator in the window. I downloaded it online. If it doesn't already come with your trading platform, you can find it elsewhere. I'm using the MT4 trading platform here. I've added the zero line to this demand index indicator because basically that's important for how I'm going to use it for this particular trading strategy, which we'll get to in a minute. This is a US dollar, Canadian dollar 1 hour chart. Okay, you can use this indicator on any trading instrument from Forex, stocks, cryptos, commodities, indices, etc., and any chart time frame. Okay, but I prefer the 1 hour, 4 hour, daily, weekly, monthly, just the longer term charts because they contain more price data, which from my experience leads to more reliable trading signals. And we can also capture some big moves like this one without needing to chart watch all day and stress ourselves out trying to scalp a few pips here and there. Okay, so a few components of the demand index indicator I'll just cover with you quickly. You've got divergence. Basically, when the indicator is making higher lows, it means that we can be in an uptrend, as you see here. Higher lows, higher lows, higher lows. We're in an uptrend. Let's just find a downtrend example. So here, quite a significant downtrend, and the indicator is making lower lows, downtrend. So that's one way you can interpret it. I'll be honest with you, this is something that you can do by just looking at your chart and doing that. But I do appreciate some people like the visual aspect of indicators. So that's the divergence aspect. As I said, anytime it's increasing in value, it means that perhaps the market is going upwards. You can see here it goes up and the market also moves up. Again, it's just replicating what you can see by looking at your chart. When it falls down, as it does here, the market also falls down. So it's just basically telling you what price action is telling you. Anyway, that being said, there is a way you can use it to assist with your entry signals. So this is how I would do it. First of all, we'd wait for the trend to form. So we can mark our support level there. Okay, we can see this is strong support historically here and then here. Okay, we've got our bullish price action. We can just wait for a breakout to the upside, whether you want to draw your resistance like that, like this, it's all the same. Okay, so we have a breakout to the upside and we're going to look to get in on this trend. Okay, have the bullish divergence that we were just speaking about. The indicator is making higher lows, market is moving upwards. So we can start looking for long trades and to get in on this move at an ample opportunity. So how would you do that? Well, the first thing is you don't want to buy high. So basically, the higher this demand index indicator is, the more chance there is that the market will be oversold. Okay, overbought, sorry. You don't want to buy into an overbought market, just as the lower this indicator is, okay, like this area here, the higher the chances are of the market being oversold, and you don't want to sell in an oversold market. For example, if you thought about selling here, you saw the indicator all the way down here, you say, okay, it's not a good time to sell. The market's already oversold. I'm going to wait for another opportunity. Okay, so that would have kept us out of trouble there. Just as here, when the indicator peaks, you don't really want to buy at the peak. You want to wait for a pullback. So the first thing we do is after this consolidation area here, Okay, this area of consolidation from here to here. We have the breakout to the upside. Draw a trend line. We're going to look to enter on this long trend. Okay, at the ideal opportunity. So the indicator can help us by, it's giving us the signs of divergence to the upside. We're going to look for long trades. Personally, what I would do is I would just trade the breakouts of these resistance levels. Not necessarily anything to do with the indicator, but it'd be wrong for me not to mention this. You see that trend line. If we just draw resistance, you can see these breakouts. This is a 1 hour chart, so you'll find that the support and resistance tends to be more reliable than perhaps you may find on the lower chart time frames, 1 minute, 5 minute, 15 minute, so on and so forth. But if we draw the resistance here, you can see that big breakout candle there. Okay, once price breaks out through this resistance, it becomes support. Okay, and we have a nice move to the upside again. Resistance level here, breakout to the upside. So you could enter this trend. You've got numerous opportunities to enter on you know, small pullbacks. Breakout there, resistance becomes support. You don't need any fancy technical indicators to tell you show you how to do this. You can just use your own support and resistance levels. As we get up here, you know, you don't want to be too far away from the trend line. Ideally, you want to pull back a bit high up here and here. But yeah, so that's how I would get in on it. That being said, we are talking about the demand index indicator here. So let's just see how that can help, okay? Basically, what we're going to, as we did with these breakouts, we're looking for pullbacks, okay? Let me just remove these resistance. Oops. Let me just remove these lines. So to avoid any confusion, we'll just keep our trend line there. Okay, so for the demand index indicator, what you can do is wait for it to pull back below the 0 line, okay? Because then it shows we're not in the overbought where we don't want to buy, but we're perhaps going towards the oversold. And as we're in an uptrend, it would be good to buy when the market is low, right? We're not trading against the trend either. We're not looking for sell trades at all here. Remember that, it's an uptrend. I prefer to trend with the trade with the trends. I'm not looking for range in markets either. Okay, so when we have a pullback, then we can start looking for an entry. And as you can see there, it's a possible entry. We wait for the cross back up to the upside. There we have a pullback below the 0 and across to the upside is an entry. Okay. I have another one here. Okay, this has a pullback below the 0 line and continues upwards. Here, these are like all opportunities to enter this trend on a pullback, yeah? Okay. And you can see that's how I would personally use the demand index indicator for entering in on these trends. You see they're real good entries on a pullback. There you go. One thing about this, as I said, these are things that you can see by just looking at the chart yourself. I mean, you can look for a pullback. Just if I zoom in, you know, all you need to do is wait for the bearish bars, wait for a bullish bar, and then start thinking about an entry, whether you want to use the indicator or the price action, the support and resistance level. For example, there, you can see this level of resistance becomes support here. You could have traded either on the bounce or the breakout there. Okay. Same here. Okay, so you can take the indicator. I mean, the indicator crossed up there, so it would have been a breakout trade. Sometimes you'll find that there'll be confirmation. You might be looking at taking a breakout trade, and the indicator will just be telling you the same thing. Okay, but there'll be cases where maybe the indicator is lagging or the indicator is before the actual breakout. So got our resistance level there, and if you can see, this crossover actually happened, this one here, before we breached this resistance. Okay, but I probably would have just waited for the resistance to be broken, because I won't really want to buy directly into that resistance. So yeah, that's how I would use the demand index indicator. Then also for looking, let's just zoom out. This is some trend. Looking for areas where perhaps the trend might be slowing down. Okay, this is not always going to work, but you can look for your divergence, bearish divergence there. Okay, so the market might start to sell off, and then it does start to have a little turnaround here. So we could be looking to exit part or all of our position up here somewhere. One thing worth mentioning, I've completely cluttered the chart. Let me get rid of all this. This is as important, in my opinion, as your entries, and that is, oh, this is actually back to there. This is as important. Let's just say we took our entry, where are we looking at? So it comes up here, has a nice pullback, and the breakout there. Resistance becomes support. Okay, arguably we could have even been in earlier, around here somewhere. But once we're in, the whole point I'm trying to tell you is the stop loss I place below the low, okay? So what's that, 15 pips? Not bad for the 1 hour chart time frame, especially when you consider this move has around 300 pips and counting at the moment. And then what I do is, as price is moving upwards, I'd move my stop loss below the lows, okay? So once we have this run up here, I'll put my stop loss here. So we're locking the trade for some profit. After this run up and this pullback, continuation, then my stop loss would come up to this low. Have this run up, pull back, continuation, my stop loss would go here. And basically run up, pull back, continuation, stop loss here. Basically just locking in as much profit as possible on the way up. Granted, there'll be times, for example, run up, pull back, continuation. If we put our stop loss here, we might have been taken out there, but still is, you know, around 180 pips with a 15 pip stop loss is fantastic. Can always look to re-enter, if not perhaps a bit too high on this trend. In saying that, there is a nice breakout entry there, that resistance, which becomes support. That actually holds up quite nicely over there as well. Even another breakout there. I wonder what the demand index said there. So do we have our demand index pullback? Yeah, we did here. Also, there was bullish divergence. So potential trade right at the end now, though you don't want to buy too high, obviously. So yeah, that's how I would have taken this trade. Trailing stop, closing out, trade for some profits on the way up, maximizing the move as much as possible. What you don't want to do, or what I wouldn't do, is have a 15 pip take profit and I don't know, just some made up target of risk to reward ratio 3-1, let's say, and 45 pips, and okay, the trade moves 45 pips to here, I get excited and exit the trade there, and you've just left all of that on the table. Okay, I mean, cut losing trades short and let winning trades run. That's what I like to do. That way, don't have to be right all of the time. We can just have we can even afford a few losses here and there, because we know when we do hit winning trades, we're going to maximize them as much as possible. Okay, so that's the demand index in the uptrend. If we just go back to this downtrend, let's just take a look at taking the pullback entries on this. So if we just mark our resistance there on the way down. Okay, the market's moving down. Got a dead cat bounce there. Basically, that's when there's a pullback from a downtrend, pullback and then a breakout. It's your dead cat bounce. I do have a video on that strategy. But at the end of the day, all you need really, in my opinion, trend lines, support and resistance, good money management, and awareness of candlestick patterns. Okay, so downtrend, let's see what the demand index done in terms of our pullback entry. So we have our pullback, we have our crossover back below the 0 to the sell zone, and we could have entered. Yeah, there, good trade. Okay, pullback, another good trade on the crossover around here. I'll just use this one. Had the pullback up, crossover to the downside, a good entry there. Here, you're starting to see the bullish divergence, so we might want to just be cautious. And also not as significant a pullback when you have a more significant pullback like this one and this one and this one here can be deemed better. And you can get in there for another good trade. And just, yeah, there's lots of opportunity to get in on this trend using a demand index indicator and support and resistance levels as well, of course, like that nice breakout down there. You've got an M chart pattern as well formed there. So that's the letter M. See that? And then a breakout on the last part of the letter. Ample opportunity to enter this trend. Okay, and again, using the stop loss, keeping the stop loss above the highs on the way down just to maximize the trade as much as possible. Okay, well, hopefully you found something useful in this video and you understand different ways you can use the demand index indicator. As I said, I don't think it's the be all and end all of trading. There are other indicators that do something similar, which would probably already be freely available in your platform. For example, the stochastic oscillator, the RSI oscillator, the CCI. Okay, appreciate you watching. If you could please like and subscribe, that'd be great. Catch you on the next one.